In today's world, the need for advanced technology and national security is greater than ever. Governments are increasingly turning to artificial intelligence to make sense of massive amounts of data. They use AI to make faster, smarter decisions that can protect soldiers and citizens alike. This is where a company like BigBear.ai steps into the picture. It specializes in providing AI-driven solutions specifically designed for the United States defense, intelligence, and homeland security sectors. Think of it as a tech company building the digital brains behind modern defense operations, helping leaders see the battlefield more clearly and react more effectively to emerging threats. At its core, BigBear.ai aims to solve complex operational challenges. The company develops and deploys AI and machine learning tools that analyze data, predict outcomes, and support critical missions. This isn't just about abstract algorithms, it's about tangible results. For example, their technology can help the United States Navy manage shipbuilding logistics more efficiently or assist airport security in identifying potential threats with greater accuracy. The company is positioning itself as a crucial partner for government agencies that need to modernize their capabilities and maintain a technological edge in an increasingly complex geopolitical landscape. The demand for these services is growing rapidly. As geopolitical tensions rise, the United States Department of Defense has made it clear that investing in AI and data analytics is a top priority. This creates a significant market opportunity for companies that have the expertise and security clearances to work on sensitive government projects. BigBear.ai operates right in the middle of this trend. Its entire business model is built on serving this high-stakes market. By focusing on mission-critical AI, the company is betting that its specialized knowledge will make it an indispensable asset for national security for years to come. For new investors, understanding BigBear.ai means recognizing its unique place in the market. It is not a consumer tech company like Apple or a broad enterprise software firm like Microsoft. Instead, it is a highly specialized player in the defense technology space. Its success is directly tied to government spending priorities and its ability to deliver reliable, secure, and powerful AI solutions. The company's journey is just beginning, but it operates in a sector where the stakes are high and the demand for innovation is constant. This makes it a fascinating company to watch in the evolving world of defense technology. BigBear.ai's main offerings are designed to provide what it calls decision dominance. This means giving leaders the best possible information to make the right choices under pressure. Its product lineup includes platforms like Pangiam Threat Detection, which uses AI for enhanced security screening at airports, and Veriscan, a tool for biometric identity verification. Another key product is Shipyard.ai, which helps optimize complex logistics such as managing naval assets. These tools are built to integrate with existing government systems, providing a layer of intelligent analysis that was previously impossible. The company's primary customers are powerful United States government agencies, including various branches of the Department of Defense and the intelligence community. The company makes money in a few straightforward ways. The largest portion of its revenue comes from long-term government contracts. These are often multi-year agreements to develop, implement, and maintain specific AI solutions for a particular agency. This model provides a predictable stream of income. In addition to these large contracts, BigBear.ai also earns money through software licensing and subscriptions for its proprietary platforms. Finally, it offers professional services where its teams provide consulting and integration support to ensure its technology works seamlessly within the government's complex infrastructure. This combination of contracts, software, and services creates a diversified revenue base. Because of its focus on government AI, BigBear.ai is often compared to a much larger and more well-known company, Palantir Technologies. This comparison is understandable. Both companies serve the United States defense and intelligence sectors, providing data analytics platforms for mission-critical operations. They both operate in a high barrier-to-entry market where trust and security clearances are paramount. However, BigBear.ai is much smaller and arguably more focused on specific, niche applications within defense. While Palantir offers broad, all-encompassing data platforms, BigBear.ai often tackles more targeted operational problems, which could be an advantage. This next Palantir narrative excites many investors. The idea is that BigBear.ai could follow a similar growth trajectory by capturing a piece of the massive defense AI market. Its smaller size might allow it to be more agile and win contracts that are too small or specialized for a giant like Palantir. This friendly comparison highlights the potential for significant growth if BigBear.ai can execute its strategy effectively. For investors, the key is to see if this smaller, more focused company can carve out a profitable niche for itself alongside the established giants in the field, turning its agility into a competitive strength. There are several compelling reasons why investors are optimistic about BigBear.ai's future. First and foremost are the powerful market tailwinds. With global instability on the rise, United States defense spending, particularly on technology and AI, is expected to increase. The government is actively seeking to modernize its systems, and BigBear.ai is perfectly positioned to benefit from this trend. It operates in a sector with growing demand and high barriers to entry, which can protect it from a flood of new competitors. This strategic positioning in a non-cyclical, high-priority market forms the foundation of the bull case for the company's long-term growth potential. Another strong signal for investors is the company's growing contract backlog. As of early 2025, BigBear.ai reported a backlog of $385 million, a substantial increase from previous years. This backlog represents future revenue that is already secured but not yet recognized. For a young company, having this level of revenue visibility is a very positive sign. It suggests that government agencies trust the company's capabilities and are committing to long-term partnerships. Recent contract wins, like a $13.2 million deal with the Department of Defense, further validate its technology and strengthen its relationship with key customers, providing a clear path to future income. The company's recent stock performance has also caught the attention of the market. In the months leading up to June 2025, shares of BigBear.ai saw a significant climb, outperforming many of its peers and the broader market indexes. This surge reflects growing investor confidence in the company's turnaround story and its potential to capture a larger share of the defense AI market. While past performance is no guarantee of future results, this momentum indicates that the market is beginning to recognize the strategic value of BigBear.ai's niche focus and its growing book of business, potentially signaling the start of a longer-term upward trend. Finally, some analysts believe the stock offers an attractive valuation compared to its peers. Despite its recent run-up, BigBear.ai trades at a price-to-sales ratio that is considered a discount relative to other companies in the defense tech industry. This suggests there could be room for the stock price to grow as the company continues to win contracts and increase its revenue. The combination of strong industry tailwinds, a solid and growing backlog, positive market momentum, and a potentially undervalued stock makes a powerful case for why some investors believe BigBear.ai could be on the verge of a major breakthrough. Despite the exciting potential, investing in BigBear.ai comes with significant risks that every investor must carefully consider. The biggest concern is the company's financial performance. While it has been successful in winning contracts, this has not yet translated into strong revenue growth or, more importantly, profitability. The company is currently not profitable, and its losses have been increasing. This raises serious questions about its business model's long-term sustainability and its ability to execute effectively. Until BigBear.ai can demonstrate a clear path to profitability, it will remain a high-risk, speculative investment for cautious investors. Another major risk is the company's heavy reliance on the United States government. Having the government as your main customer provides stability, but it also creates a significant concentration risk. Any changes in federal budget priorities, defense spending cuts, or shifts in political policy could directly and negatively impact BigBear.ai's revenue stream. The company is also vulnerable to the long and often unpredictable timelines of government contracting. This dependence makes its financial future less certain than that of a company with a diverse, global customer base across various commercial industries. Competition in the defense AI space is fierce. BigBear.ai is not just competing with other small, agile companies, it is up against established, well-funded, and profitable giants like Palantir and Kachi International. These larger players have deeper pockets, more extensive resources, and long-standing relationships with government agencies. To succeed, BigBear.ai must prove that its technology is superior or that it can serve a niche market more effectively than its larger rivals. The intense competitive landscape means there is no guarantee that BigBear.ai will be able to carve out and defend a profitable market share. In summary, BigBear.ai represents a classic high-risk, high-reward investment opportunity. Its strengths lie in its strategic focus on the booming defense AI market, a growing contract backlog, and its potential to become a key technology partner for United States national security. However, these strengths are balanced by significant weaknesses, including a lack of profitability, slow revenue growth, heavy customer concentration, and intense competition. The stock has shown high volatility, rewarding speculators but posing a risk to those with a lower tolerance for sharp price swings. Prudent investors should weigh these factors carefully and conduct their own thorough research before deciding if